Right before the holidays, we're not overly excited about new tax law changes, but it is what it is, and we need to be prepared for it. So today I'm going to introduce our support staff first. First and foremost, I want to say thank you to Kathy Davis. Kathy is with Seat House Creative, and she helps us put our presentations together for us. As accountants, we're not fantastic at that, so thank you, Kathy. Over here helping check in today, we have Sean Cardwell. He's a shareholder in our audit department. We have Sam Cates. He heads up our client accounting services department. And then we have Hannah Hensley. She is with Vicki in our payroll systems department. Today, Vicki will be presenting with regards to the W-4 changes. Vicki has been with us since 2005. She is a CPA. She started out in our client accounting services department and has naturally migrated over into our payroll systems department. She is fantastic with the details, which is exactly what we need when we're dealing with payroll systems. She keeps busy with her kiddos when she's not at the office. They run her ragged.
Yes, sometimes. Yes,
so,
yes.
With that said, Vicki Stalnaker with Payroll Systems, Director of Operations, will kick us off today.
All right. Well, thank you, Connie. Thank you for all of y'all coming in today. To start off our presentation, just want to give a little bit of background. We always have to have a little bit of disclosure as far as the items that we're going to be discussing today. We are providing it for informational purposes only. With payroll systems and also with JRBT, we do not provide HR advice. Some of these items kind of go over gray area in between payroll and HR. So we're not able to tell you exactly on some of the HR items, but we can tell you how to handle it for your payroll systems. And when it comes to one of the topics, WOTC, that one kind of goes into some of the tax items as well. And with the Department of Labor, some of your employment tax items. So we can provide some guidance, but sometimes we may need some other legal professional advice as well, depending on the situation of your company. So like Connie said, I'm the Director of Operations for Payroll Systems. Hannah Hensley, who we introduced earlier, is our payroll tax specialist, so she helps make sure we're all in compliance with all of this within our bureau. All right, so we're going to cover the FLSA overtime exemption changes that go into effect on January 1st, as well as touch on the work opportunity tax credit, and the bulk of our presentation will be about the 2020 W-4 because it is a significant change to that form this year. And with these PowerPoint slides, everybody that RSVP'd or provided your email address when you signed in, if you weren't able to RSVP before, we will send a copy of this presentation. There's a lot of numbers, a lot of deadlines, items in it, so I just want to make sure you have that information. All right, so with our overtime. So we have the U.S. Department of Labor, which has the wage and hour division, which deals with our overtime and our minimum wage requirements. Right now, our current standard of paying $455 weekly to meet the salary requirement for some of the overtime exemptions, it's been around since 2004. So it has been 15 years since they've had a change. We have our exemptions for our executive, administrative, and professional, as well as our exemption for our highly compensated employees at $100,000. In 2016, DOL did pass a rule, but it was significant. It was doubling that weekly salary amount, but it ended up being overturned. It was going to be too much of a change, and it had ripples kind of throughout everywhere of making that drastic of a change. So ever since 2016, they have been working on trying to get that salary rate changed. In 15 years, a lot of things have changed. So the amount that they were being paid of $23,000 15 years ago is different than it is now. So earlier this year, in March, they proposed a new rule. They were able to get it passed by September, and it is going into effect. So what's our change? So we're going from $455 a week to $684 a week, which is about from $23,000 to $35,000. If you're looking at hourly rates, if you pay your people salary, but still kind of look at it in an hourly term, we're going from $11 to about $17 an hour. Your highly compensated employees are changing from $100,000 to $107,000. So all of that is kind of similar to what we had before. We had a weekly salary amount and then a highly compensated amount. Something new with this time is bonuses and incentive payments. So when you have bonuses, non-discretionary items, which means they're tied to the employment contract, with those items, it can count up to 10% of that salary amount, the overall salary total. So you can pay them a base salary, but then have their bonuses and commissions be part of that 10%. They also have a catch-up provision now that they did not have before. So if you get to the end of the year, you have somebody that typically falls under the highly compensated employee, and they're making about $100,000. They're now short in 2020 by a little over $7,000. So at the end of the year, you can give them a one-time bonus to make sure they get above the amount so they stay exempt from overtime. And you can pay it in the following year, provided that it's in that first paycheck. So at the end of December 2020, you need to give them $8,000 more. You pay it on January 5th. You've now satisfied that requirement. But you have to make sure you don't double dip on that payment, because that payment's going to be in 2021. You can't count that $8,000 towards 2020 wages and 2021 wages. So in your system, you may want to label it something different as a catch-up payment, some type of way so that you know when you're reviewing those earnings records to make sure your highly compensated people made it above the $107,000 threshold. So that's new. That's something that we did not have before. If you have somebody in the U.S. territories or motion picture industry, those have their own weekly salary amounts, so it did get adjusted a little bit. But if you have them there, the information about it. Okay, so with our duties test, they made it a little easier for us with this update because they didn't change the duty test. The same test that you did before to review your employees to see whether or not they are exempt from overtime, it didn't change. So we have our salary level test, our salary basis test, and the duties test. Those are the 3 tests that you have to go through to see if somebody is exempt from overtime. Still have the same exemptions that we had before: the executive, administrative, professional, outside sales, your computer, and your highly compensated. So the main thing that we're changing is the salary levels, going up to the $684 a week, and then changing the highly compensated and the catch-up provision. So our impact. This is effective on January 1st. So we have a little bit over a week to make sure that we're paying people correctly for that first payroll in January. They expect 1.3 million people to get additional pay based on this. Almost 300 million in extra pay, and that is based on people not changing them to salary, like raising their salary level. So say if they were at the $455 salary and the employer didn't give them a bump in salary to get above $684, they now have to pay them overtime. So they're either going to get an overtime or they're going to get a salary bump, and that's what makes up that additional pay. Cost of the final rule. For businesses to understand it, to go through all of their employees, look at ones that were exempt from overtime, make sure that we can still keep them exempt from overtime, or ones that change from non-exempt to exempt. So we have about $543 million the first year. On average for 10 years across, it's about $170 million per year. And the DOL is not going away anytime soon when it comes to these changes. It took them 15 years to get something passed. They're planning on doing it more frequently. Depending on who you talk to, what you read, it can be 4 to 6 years. I'm expecting 3 to 5 years. I doubt they'll go past 5 years before making another change. And they only plan to do a proposed rule, so they'll send out a proposed rule at the beginning of the year, take comments on it, and then pass the final one before the end of the year. This one took 6 months. They actually moved it very quickly through the system of getting it finalized. So they're going to do that same thing in the future. And they plan on indexing it. So we'll have this change ongoing from the DOL. So information regarding this overtime. They have a great website to talk about this exemption change, the salary rate change. They have the final rule information. The register notice, if you're a person who likes legal jargon, the register notice is full of it, of all the federal information about this. The fact sheet is great, as well as the frequently asked questions. For employers that are reviewing your employee information, trying to see whether or not somebody is exempt from overtime, the Small Entity Compliance Guide has great tables to go through each one of those tests to make sure that you're categorizing your employees correctly. A side note that's not in the presentation, Department of Labor in Waco, they're auditing a little more than they have before. Previously, we only had one auditor in Waco, but a couple of years back, they have now increased us to 3 auditors. So they are doing more what they call routine audits. I call them random audits. It's not based on somebody reporting information, saying that you're not in compliance with DOL. It's just they're showing up at your business. So they are out there. So we need to make sure that we're in compliance with these overtime, because that's one of the first items that they're looking at, is to see if you're classifying your employees correctly and paying them the correct amounts of overtime. All right, so we're going to touch on WOTC briefly. Like I said, most of our presentation is going to be on the W-4, because that's the greatest impact that we have right now. So with WOTC, it's the Work Opportunity Tax Credit. Sometimes you'll hear it called WOTC, just depends on who you're talking to. It is a tax credit for employers, basically free money for the employers. And it is an incentive to hire employees out of certain targeted groups. They're trying to get those employees back into employment, into good employment, and they are trying to give this credit to employers so that way they turn around and give that back to the employees. So the entities that can claim the credit, all of your taxable employers, your for-profit, it's just a credit that goes on your tax return up to your business income. If you don't have any taxable business income, then it pays you back your Social Security tax that you have paid towards your employees' wages. On tax-exempt employers, your not-for-profits, they can also claim this credit, regardless if they pay tax of any sort. Even if they don't file a tax return, there is a form that not-for-profits can file to obtain this credit. However, they're limited to only one of the targeted groups, the veteran classes, which we'll go through those targeted groups here in a second. So it's a benefit for employers to hire individuals from these targeted groups. So the Department of Labor, Department of Treasury, and IRS kind of handle all of this. However, they don't want to do the work. So the federal government pushes it down to the state level, to our state workforce agencies. And so they provide them grant money to be able to cover their cost of doing this. In Texas, that's your Texas Workforce Commission, our unemployment commission. They handle all of it. Texas is one of the best ones of handling the WOTC. They actually turn around the certifications much faster than some of the other states do. WOTC is actually set to expire on January 1st. However, they do expect for it to be extended at some point. Right now, I just got a notification yesterday, there's a spending bill that managed to get through the House. With everything going on in D.C. right now, I was surprised that it actually managed to get through one of them. But there's a spending bill that made it through the House that has WOTC on it, trying to extend it before December 31st. Now, whether or not that makes it through the Senate before December 31st, who knows right now. But even if it's not extended by January 1st, employers that are currently doing WOTC will continue doing their certifications like they always have. If you haven't started WOTC and want to, you can still start it. It's just you won't actually get your full certifications until they have extended it or retroactively extended it. But we do expect that to happen because ever since the WOTC started, they have always kept it going. It may be April when they finally pass something, but they'll move it back to January. So you can still get those credits from January on. So our target groups. These are a list of all of the target groups that are available for the WOTC's credit. I'm not going to talk about all of them. There's mainly two in particular that I'm going to talk about. One is the summer youth employee. It does not apply to every summer youth employee that you have during the summertime. It's only based on ones that are in certain geographical areas for that. On the Supplemental Nutrition Assistance Program, the SNAP program, which is the food stamp program, it applies to family members that are on the SNAP. So if the parents are on SNAP and the child comes and works for you, they qualify because they are a member of that family. So each one of these has certain specific items. On the unemployment, it depends on how long they've been unemployed, but the goal is to get these people back into employment because they typically will have some type of barriers or they're on some type of assistance, and by getting them into employment, we can help them become more a part of the employment community that we have. Okay, so our credit amounts. So the credits actually start pretty quickly once you hire those employees, once they work 120 hours. So if they're working full-time for you, after 3 weeks, you start earning the credit as an employer. You can claim up to 40% of the first year wages, which is $2,400. And depending on your target group, your veterans can earn up to a $9,600 credit. Your long-term family assistance is $9,000, and your summer youth program, those are a $1,200 credits. So as far as the types of employers that benefit from WOTC, it's ones that typically have high turnover. And the reason for that is if a person's only coming to work for you for a few months and you're replacing them with another person, and that other person happens to be in the targeted group, your timeline for those credits start over. Okay? So you end up getting a little bit more credits that you then can pass on to your employees. Fast food restaurants, construction and manufacturing, if your entity pays close to minimum wage, because typically a lot of people that unfortunately are on minimum wage tend to fall into some of those targeted groups. So the goal is to get them in, receive the credit, and pass that credit back to your employees. That's the whole purpose of the WOTC. All right, so the steps. So there are forms that each applicant has to provide to you in order for you to claim the WOTC. It's basically a questionnaire to see whether or not they fall into those targeted groups. It has to be completed on or before the first day of employment because you want to make sure that you're not discriminating, you're not creating any issues with somebody filling out these forms. However, you cannot complete it after the fact. So you cannot have somebody come in on January 2nd, and then on the 10th say, hey, fill out these forms. You can't do that at that point because there's a certification, there is a date that you have to put at the bottom of it. The forms can be completed either paper or electronically as long as it covers all of the questions. In addition, there's third parties that help with WOTC. And a lot of times they will administer these questions to your employees as they come in. So your applicants, whenever you have applications, they'll go to a website, complete all of these questions. It helps take some of the pressure off of the employee because they may, or potential employee, because they may not want to disclose that information to you as an employer, that they're in one of those targeted groups. So by using a third party or having an online system, they're able to answer that and they can feel a little more comfortable about answering some of those questions. So at the point you have the two forms from the employee, you then submit them over to the state workforce agency within 28 days of employment. At that point, they review the information, compare it to federal records to see whether or not they are on some of those assistance items, and provides information back to you. Once your employee is certified, then you can start keeping track of their wages and their hours so you can start keeping track of your credits. And then depending which tax return that you're filing, I've listed some of the forms down at the bottom in order to claim the credit. Okay, so resources. So the IRS Department of Labor has information about this, but the best resource is the Texas Workforce Commission. They have the best website as far as tables and information for each of the targeted groups. Your management team at JRBT is a great resource as well. Bob Woodard is not here today, but he's one that has dealt with a lot of the WOTC at our firm, or you can reach out to me at Payroll Systems. But we just want to make sure that you know about this credit and that it is available for you as an employer. There's definitely third-party agencies that handle WOTC. We have one that we have partnered with, and typically the way they work is they keep track of all the credits for you, so they do all the certifications, all of the follow-ups, and their payment is a portion of the credit. And so they calculate your credit throughout the year. You pay them their fee for doing that admin work for you. and then you get the credit whenever you file your tax return. So really brief on those two items. Department of Labor, very important, WOTC, a little bit of knowledge on that, and we're going to start here on the Form W-4. So in your packet, you have the old W-4 and the new W-4, and so we'll be comparing those two. All right. So we're basically going to do a side-by-side comparison. We're going to start off with why are we changing? So our 2019 W-4, it's looked the same way pretty much since the 80s. You have your single and married, your exemption, additional withholding, and then whether or not somebody is exempt from withholding. Well, in 2017, our tax laws changed. We had our Tax Cuts and Jobs Act, TCJA, that was passed, and it got rid of our exemptions. The personal exemptions were suspended until 2025. So if those do not get extended at that point, we may have a change in the W-4 again in a couple of years. I'm kind of hoping they continue on through so we don't end up with a new W-4. But their goal is to reduce the complexity and increase accuracy. Our current W-4, the 2019, no longer matches that tax law. Okay, because before we had exemptions and standard deductions. Now we only have the standard deduction. So those allowances that were on the W-4 don't really match our tax system anymore. So they're trying to make it where we end up with less refunds and less people owing money. It almost looks like a mini tax return if you look at it, okay? So they're trying to make it where your taxes withheld from your payroll check pretty much matches what's on your tax return. The effective date is for anybody that is hired after 12/31. So when you go back after New Year's Day holiday, if you get New Year's Day off on January 2nd, if you have a new hire that day that comes into your place of employment, they have to use the new W-4. They cannot turn in a 2019 W-4. It is invalid by that point. On your current employees, if they want to change their W-4 after January 1st, they have to use the new form. So if they fill it out on December 31st and forget to hand it to you and bring it to you on January 2nd, they need to do it on the new form. Okay? The old one will not be valid. Now, can you make all of your employees change to the new W-4? You cannot. Your current employees, you cannot require them to. You can inform them about the new W-4, but you cannot make them. There is talk in the payroll community and hopes that they will make that a requirement at some point so that all of the systems are on the same W-4, but right now it's not happening anytime soon. On your exempt employees, these are the ones that mark exempt on the W-4, stating that they didn't have tax liability last year, nor do they expect tax this year, so they claim exempt from withholding. They have to give you a new W-4 every year by February. It will have to be on the new form at that point. So we're going to have a lot of new forms coming in. We're going to have old forms and new forms to deal with. So the final form was finally released a few weeks ago. It took them a long time to get the final one out for us to look at. They've had a few drafts this year. We have 5 steps: personal information, multiple jobs, your dependents, and then your adjustments, and then the signature. With exempt employees, those claiming exempt from withholding, they have hidden what they can do for exempt. It no longer has a box for them to check exempt. They will actually write it on the form. So IRS is trying to hide that a little bit because they don't want people claiming exempt from withholding, because most people who have W-4 wages tend to owe some type of tax. Non-resident aliens, they need to review the instructions as well as the Notice 1392 for special instructions of how they need to complete their W-4. Okay, so on to our comparison. So we're going to go step by step, comparing the old W-4 to the new W-4, in hopes that we can explain this to our employees some. With explaining the W-4s to them, you cannot give tax advice. All right, you cannot tell them how to complete the form. You can provide the instructions, you can give them some guidance, but you cannot tell them what to choose. Because at that point, you're telling them tax information, okay? I am not a tax accountant, so I will not tell you tax information, okay? We got a whole bunch of tax people at JRPT. I am not one of them, okay? Payroll tax, I got you covered. But when it comes to income tax, I don't do income taxes. All right, so I'm not going to tell my employees that work with me in payroll systems what to put on their W-4, okay? They have to be able to, they have to make that decision. So on the 2019 W-4, we had our personal information, Social Security number, name, address, all of that is still the same. We had our single, our married withholding at the single rate. That is now changing to your anticipated filing status. So it's now going to match tax returns. So you're going to have single or married filing separately, married filing jointly, and then head of household. Now you may have I'm going to say a younger child come in, somebody who's starting to work for the first time, and they go, I don't know what to do, okay? It is okay to tell them to go talk to their parents, okay? You can tell them to go talk to a tax advisor, talk to a relative. You are able to say that to them, but you cannot say, hey, you need to put single, because I know you're probably going to do single in your tax return. We can't do that, okay? So they have to make that decision as far as what they're going to do. Now that does mean a lot of people are going to take these W-4 home that didn't take them home before. Because if you filled out a W-4, you typically know what you're going to put on it. Some of these employees are going to need a little more time, or they're need to take it to their spouse, which is the case that happens in my house. My husband takes it to me and goes, here, complete this for me for my W-4. So this anticipated filing status. So with step 1, it is the only required step besides the signature of step 5. So the employees who used to come in, mark single and married, give you the form, it's basically the same thing. They'll complete step 1 and sign it at the bottom. With the anticipated filing statuses, some of the payroll community has provided some information regarding how to compare the old form to the new form. So single and 0 on the old form, single on the new form is equivalent to single and 2 on the old form. Married on the new form is equivalent to married and 3 on the old form. So we don't match up a single and 0, single and single between them. So it's single anticipated filing status, single and 2, married anticipated filing status, married and 3. So that's why there's a difference between the forms, because our tax laws have changed, so the forms are handled differently with it. So our withholding tables that are used to analyze for our payroll tax withholdings, they look at what you're making on each payroll. So if you're making $1,000 a week, it takes that $1,000, annualizes it up to $52,000 for the year, takes off your standard deduction, let's just say it's $10,000, you have $42,000 of taxable income. It will calculate that annual tax, divide it by 52, and come back to your payroll withholding amount. So every time you have a payroll, it annualizes that amount. So if employees receive a raise during the year, they do not have to redo their W-4 unless some type of outside item has happened for them. If it's just a pay raise, the payroll system will annualize that amount and come up with their new withholding. So same way our current W-4 works, the new one's the same way. You do not have to redo your W-4 unless you've had some other type of outside factor involved. If an employee does not return a W-4, at that point you mark them as single in your system. On the old W-4 we did single and 0. On the new one you just mark the anticipated filing status as single. So it's still the same type of thing. They actually get a better benefit this time because it's the equivalent of single and 2, which is a little bit less withholding than they would have had at single and 0. So the new form actually benefits the people a little bit who don't return those W-4s back to us. Okay, so this is where it gets a little more complicated with the form. However, the IRS does have a lot of instructions and information to help us work through this. So 2 earners, multiple jobs worksheet. With our old W-4, we've had all these worksheets that were in the back. Sometimes you would see employees complete them, and sometimes they wouldn't. Or they would complete the exemption ones, come up with like 15 or 20 exemptions, and then go back on the front page and put like 5 or 6. Okay, so they don't end up matching all of their worksheets. Well, IRS is using these worksheets to help with the new W-4. So we have the worksheets again, and before there was the 2 earners, which you may see completed a little bit previously, but with the new W-4, it does come into play to make sure you have the right withholding. So this is an optional step. It is not required. Like stated before, step 1 and step 5 are the only one. With this, you have 3 options when you have multiple jobs. And this means that you could have 2 spouses with jobs, and you can have 1 person working 2 jobs. So as long as the household income is more than 1 job, you will have to kind of work through this section. So on A, there's the withholding estimator. IRS released this withholding estimator after all of the tax laws changed to help people estimate their withholding. If you used it in 2018, it was not a friendly estimator. It definitely looked like a tax return, and they threw all the questions to you at one time. So you had the huge web page of all of these questions and blanks to enter information. Very intimidating. They have redone the estimator. It is now more of a prompt question. So they'll ask you, what is your anticipated filing status? And you answer single, and then they'll prompt you with the next question. You answer that one, prompts you with another one. So it's a little more user-friendly for your employees, and they don't feel overwhelmed as much. So with this withholding estimator, it works really well if they have jobs that have different income amounts, or if they have outside items as well, besides the jobs. So they can go through, work through that estimator, and it will give them an additional amount to put on their W-4 at that point. On B, they can use the multiple jobs worksheet, and that is used when income is not similar as well, so they can work through that part of the instructions on the W-4. The last one is when you have 2 jobs that have similar pay. There is a box that you will check, and what that box does is it splits the standard deduction among the 2 W-4s. So earlier I stated there was a $10,000 standard deduction, just estimated numbers, okay? $10,000 standard deduction. It will take and split it 5 and 5 between your 2 W-4s. So you end up with a little more withholding that is there. If you don't do that, check it, then you have $10,000 over here, $10,000 over here. Now you're under withheld, and you can owe taxes at tax time. So if there's 2 or more W-4s, you have to do one of these 3 steps to make sure that you have the correct withholding. All right, we just don't want to double dip on that standard deduction within a household on multiple W-4s. Okay. All right, so on to step 3, our next comparison. So on the W-4, the previous W-4, we had our allowances, which were kind of our exemption. On the new one, now we have our qualifying children and dependents that are handled in this step. So this one's an optional step as well. And it's going to reduce the amount of withholding that is withheld, because it's going to change that taxable income that we're calculating those payroll taxes on. And it's based on the following tax return credits: the child tax credit, the credit for other dependents, as well as a few other credits that are explained in the instructions that some people may have. So with these credits, if you have 2 or more jobs, you're only going to put it on 1 W-4. Same thing as the standard deduction. If you put these credits on 2 W-4s, you've now taken it twice. So you're only going to put it on 1 of the W-4s if there's 2 or more jobs in that household, and typically on the highest paying job. So the way the calculation works, once again, you have your taxable income, which is the wage income. They take off the standard deduction, then they're going to take off this credit and calculate your tax. So if the 2 earners put those credits on both, you've now taken it on both of them, and you are under withheld for your withholding. So you only put it on 1, typically the highest paying job. So on step 4, these are the other adjustments that we have. And once again, there was a worksheet for this in the previous W-4. I honestly have never seen this one completed. In all the years of doing payroll, I've never seen this one completed by anybody. It was at the very back. They gave up after the first 1 or 2 worksheets at that point, right? So we have it again. It does serve a purpose to make sure we can get our withholding accurate. So hopefully our employees will be using these worksheets for it. So again, it is an optional step on step 4. And this one accounts for increases in withholding, so reporting additional income, and also decreases in reporting as well. So on the increases, this is your other income. So it could be investment income. It could be some of your self-employment income, which on self-employment, it is best to use the calculator rather than to put it in here. And the reason why is on the self-employment income, you have both sides of your Social Security Medicare tax that you're taking care of, and it's not going to account for that easily here. So the self-employment income, if somebody has that, definitely should use the tax calculator or talk to their tax advisor as far as what to put on their W-4. Do not include income from your other Form W-4 jobs. So if you have 3 jobs, don't put job 2 and 3's income on job 1's W-4, because at that time you're going to be over withheld. But if you have investment income, any type of gains that you're going to be reporting, you can put that on there to adjust your withholding and make your withholding go up. On deductions, the decreases, this is whenever you're itemizing deductions. So the tax calculation for the payroll tax is designed around the standard deduction based on your filing status. So if you itemize deductions, get above that standard deduction, then you would use this line to put those additional ones. So like mortgage interest or some of those other items that are itemized deductions. If you have 2 or more jobs, same thing as before, only enter on one W-4. If you enter that income on multiple W-4s, you're going to increase your withholding amount. If you enter those deductions, you're going to reduce your withholding and you're probably going to owe at the end of the year. And do it on the highest paying job again. All right, take a breather. Okay, we will get to some questions here at the end. On step 5, it's the signature. I did not put it up there. It's the same across the forms. It is required. Now your employees. The biggest issue with the new W-4 is the privacy. Okay, so there's a lot of information that's going on this form. You could have an employee who's working another job besides yours and you don't know about it. Say if you have a moonlighting policy, they're not supposed to have multiple jobs. Well, if they disclose that to you on this W-4, they may be scared about losing their job. So IRS is trying to make it where we can address that. So if you don't want to release your information, use the withholding estimator. So the employee can go online to the IRS website, which some of them may not want to provide that information to IRS. IRS is not keeping it. They don't ask for your name. They don't ask for your Social Security number. It is just a calculator, basically. So they can use the withholding estimator, and it will give them a number. And that goes into the line 4C, which is the extra withholding amount. Okay. If an employee wants a refund, which we have a lot of employees who like to get those refunds every year when they file their tax return, there's 2 options for that. One is to check the box in step 2C. That's the one that splits that standard deduction. So it will increase the amount of withholding they have withheld on their paychecks. Or they can put in an additional amount, which is the same thing that we've always had on the W-4. You know, employees will say, give me an extra $50 per paycheck because I want to make sure I get that refund after I file my return. They can still do the same thing as before. On the exempt employees, they will write exempt below 4C. There's this tiny little spot of white on that form. And they will handwrite exempt. There is no longer a box to check. There's not a yes or no. They have to handwrite it on there. If you use some type of electronic onboarding where you're gathering W-4 information from your employees, you have to have a way for them to tell you exempt. Whether you put in an additional field that allows for them to put exempt, give them the option to turn in a paper W-4 if they want to be exempt, you still have to give them the option for that. Like I said before, IRS is trying to hide that so that people don't claim exempt from withholding. And they have to complete again that new W-4 each year for you. All right. So, employer concerns for us. For calculating payroll taxes, before we always had our Publication 15 Circular E, kind of governed what we do on our basic payroll withholding. They are splitting that for 2020. We're going to have Publication 15, which has all the detail. All the tax tables are now getting moved over to a new publication of Publication 15T. It is still in draft form as of yesterday afternoon. I didn't check this morning to see if they released it. They said it was going to be mid-December, but we're already at the 18th. Haven't seen the final one yet, so hopefully they'll release it pretty soon. It covers the percentage and the wage bracket method like we've always had before in the Circular E. However, now they have to go between automated and manual payroll systems and dealing with the two different W-4s. Because the two different W-4s calculate differently because we have allowances, which don't really exist on the old W-4, and then we have our new one that's on the anticipated filing statuses. So calculating payroll checks is definitely going to get more complicated if you're using a manual system of some sort. Some of the calculations are half a page long, some of them are a page long, and it's per paycheck of looking at that. And keeping track of your employees, are they on the old W-4 or are they on the new W-4? So it does make it a little more difficult. So with our payroll systems, we have to accommodate both the old and the new. For us at Payroll Systems, our software just released that information, at least for our part of the software, our in-house part of it, to us at the end of last week. So we've already been looking at it and playing with it. Our employee portal side will be released on December 31st. So we'll be pushing out information as far as what to choose because it is different. And we have to make sure that we accommodate both of them. With the manual payroll calculations, like I stated, that they are more complex. IRS yesterday sent out a quick email blast. I'm on one of their newsletters listings that if you're doing manual calculations, they do have a spreadsheet that's now available. It's a withholding tax assistant that they have on their website that you can download. And it's a spreadsheet that lets you calculate one paycheck at a time based on old W-4 or new W-4 to calculate federal income tax. So they're trying to help with it, but still on a manual payroll system, it's going to be a little more difficult with them. If you have salary employees and you calculate one paycheck at the beginning of the year, they're paid the same the rest of the year, not as big of a deal. But if you have hourly people where their gross pay is changing all the time, it's going to be a little harder. With dealing with employee questions, the biggest thing you can do as an employer is to review the forms. Go through it, work through the form, using your own information, using bogus information, kind of work through how it works. Play with the tax estimator online. Answer the questions differently, see how it prompts. So that way you know how to address some of your employee concerns. If with the current W-4, there's certain questions that they ask all the time, make a list of those. If you have a HR department, if you have a payroll department, make sure everybody's on the same page on how to answer those questions so that you're consistent with your employees. And provide time to the employees to review the IRS facts. They have some good questions and answers that's explained really well for the employees to tell them how to do this W-4. And for those missing W-4s, with onboarding of the employees, getting back those onboarding papers, this W-4 is going to hang out. They're going to take it home. They're going to look at it. They're going to forget about it. That first payroll check's going to come around. We're going to put single on there. They're going to have a lot of withholding. If they weren't expecting it, maybe we'll get it back a little quicker, okay? But we do have to have procedures in place to follow up on those W-4s because they're not just going to sign it and give it back to you. You know, unless they have a simple situation, they may need to work through it a little bit more. So for resources, I have the final W-4, the draft 15T, which hopefully they'll release the final one soon. The facts for the employers, as well as your tax withholding estimator to play with that online. So, questions with this? Anybody? I know. Oh, right there. Sorry.
When will you be sending the slides out?
We'll probably send them out probably tomorrow. We'll have them out by tomorrow.
Thank you.
Yes. Yes. Okay. Any other ones? So it is definitely a different form than what we had before. But the main thing to remember is step 1 and 5 are the only ones required. A lot of your employees will just do those. It's just the ones that have the other situations that they may have some questions.
Employees with the 2019 don't have to submit a 2020.
Correct. If you have current employees that have a current W-4, they do not have to do a new one. They do not. So theirs just rolls forward until they have some type of election change.
Okay. But we do need to get them to review the changes.
Yes, we need to let the employees know about them, yeah. Some employers have sent out information saying, hey, there's a new 2020 W-4, just to let you know if you have any election changes after January 1st, use this. Some employers are encouraging people to redo their 19 W-4, the one they're familiar with, before December 31st, saying, hey, do this, kind of thing. If you think you're going to have a change, go ahead and make it now, than waiting until later. But the 2019 doesn't match, what our current tax code is. So, okay. Any other questions? Yes.
Vicki, can you go over again on step 2 about when you check the box?
On the box? Okay. On 2.
I didn't catch that.
Yeah, on 2C, that is where you have 2 jobs in the household, and you have the standard deduction. The household only gets that one standard deduction, and that splits it between the 2 W-4s at that point.
Well, you said if you check it, you'll get more withheld.
You'll get more withheld, correct.
Because the deduction gets half.
Yes, because the deduction splits in half. If you don't do that, at that point, you end up with too little withholding because you double dipped on the standard deduction between the 2 different W-4s. Yes. Okay. Okay.
You were saying that there's a difference in the one and the old method and the new method with some of the different rates, applications as far as withholding?
Yes. Is it on like the publication 15T for calculating, or just as far as the amount of withholding that's happening?
If they mark one on the, I think it's on the regular, they had mark 1 for
Okay.
changes.
Okay. Okay.
So that all impact, that all changed with the tax law change, right?
Correct. Correct.
So if they're under the old W-4, if they're 1,
Mm-hmm.
on January 1, 2020, of the new year, that won't.
There's not really a direct equivalent at that point because single.
Already changed back to.
Correct. Yeah, in 2018, a lot of people, when they filed their tax returns, ended up owing money. Okay, IRS actually waived some of those penalties because people were underpaid for 2018, and that was because the old W-4 didn't match the new tax laws that were in place. So on the old, marking single on the new one is kind of equivalent to the single and 2 previously. So if somebody did single and 0 on the old one and they're trying to move that same thing to the new one, they would have to mark single plus something else in order to be equivalent. Okay, so it doesn't, single on the old one doesn't necessarily match up with single on this one. They'll have to do the calculation. The worksheet from IRS, I'm actually planning on playing with it a little bit because I want to see kind of where the withholding falls out. If you choose single, do the 2C, how much withholding do we have? Kind of play with it now that they've finally released some of the tables so we can see the background calculations to kind of see how the adjustments on the new W-4 falls out. Okay.
And you don't have to fill out a new form for 2020 if anything changed, if nothing changed.
Correct.
But even if they just wanted to change and say we're withholding an extra $50 now, and we're going to change it to $100.
They have to use the new form. Correct. Yeah, any change, whether, before they had their allowances and they're like, oh, I want to change from single and 2 to single and 3, they have to use the new one, follow all the new guidelines. If the additional amount was 50, now they want to change it to 100, they have to use a new form. Anytime you have a change, you're supposed to use a new form. Now, I'm not saying employees haven't done that, but they're supposed to use a new form. Every time you have a change, you're supposed to receive a new W-4. Okay. All right. One more.
Going back to this checkbox, how does it work on the tables if they check it? How do you work through that?
I'll get with you afterwards to go through that. Okay. Okay.
Go with these guys.
Go with them? Okay. Yes.
So if we're on an automated payroll system, individual, like DMACS.
Yes.
So when those new payroll tables come out on January 1st, so someone was single and 1, this year they were taking it ended up being $20. So when the new payroll ones come out, the new tables come out, does that single and 1 that was $20 get any different?
It shouldn't change it a whole bunch. It should only change it by where the brackets have fell for the new year based on their tax tables. It should still somewhat end up close to what they had before.
So we have an automated system, and we get the updates,
Mm-hmm.
and apply them and everything. Our employees are not, the older.
It would be similar to how it happened in the past, where it would just be a slight change from year to year. The only issue is whether or not that single one still matches up to what they had in the tax, what the new tax laws are. So like 2018, if things went okay for them 2018, it probably may be okay for 2019 and 20 year. It just depends on how that tax law affected them, on what they had of income and expenses going on, income and deductions. Okay, all right. Well, Hannah and I will be around for any additional questions. Feel free to reach out to us. Our business cards are in each of the cups that we had at your separate places. So thank y'all very much for coming today. Oh,
Sign up for CPE. Please make sure and sign out.
yes,
There's also a questionnaire out there to fill out.
yes. For any CPAs that are wanting CPE credit, make sure to sign out, and there's also an evaluation form, which you can complete and give it back to us back out at the table. Okay? All right. Thank you.